Hey everyone. As I'm sure you have noticed, there's been quite a bit of banking turmoil here in the US and abroad recently. Several medium sized banks have failed. Deposits are moving out of those banks that people feel are less safe and are moving towards banks that people feel are more safe. And that means the larger banks like Bank of America and JP Morgan are attracting deposits. Fueling that change has been this um, money that's chasing yield. Folks can now get over 4% return on their money. So they're looking at their banks and saying, wait a minute, I'm leaving my money at this bank that's not giving me that much of a return. And on top of that, it's not one of the safer banks. So why don't I either move my money to one of the safer banks or move it somewhere that's going to give me a return on my money? Something like a savings account, a certificate of deposit, maybe a money market fund. And so in this video, I wanted to talk about how that turmoil in the banking industry is impacting SoFi stock investors. So I want to talk about in this video what that means for SoFi stock and SoFi stock investors. And so let's begin. So what I'm going to look at here is SoFi stock's earnings call, where Wall Street analysts were worried about this same question that I'm asking here, right? Wall Street was concerned about how is SoFi getting impacted. So this question from Bank of America says, can you talk about the larger strategy and is there any change now that you've grown your deposits, or is it still very much a buy and distribute model? So what this analyst is referring to is SoFi's primary strategy is to make loans, originate loans, and then sell them, right? And just make fees off of originating loans. They don't want to really hold on to these loans longer than they have to because that means taking on the risk that some of these borrowers do not pay that loan back. Right? It's a lower risk business to originate the loan and then sell it and take whatever fee you can for origination and sale and maybe servicing in that much, right? So uh, the CFO of SoFi jumps in to respond to that question. So in home loans, we ended up selling 78 million of their principal at a 104.7% execution level. So the reason it's higher is because of some hedging and that stuff. But they were able to sell more than the 100% of the loans they originated, home loans, right? There is no trouble in the home loan market, in other words. But in the personal loans business, we did not do any wholesale loans in the period. They didn't do any. That's insightful there. And so the CFO elaborates, the market obviously continues to search for shorter duration securities backed by higher credit collateral. That's the big difference here. In the personal loans, there is no collateral. There is no collateral. So if there's a default, you're stuck with that, right? There isn't any way you can get your money back. But with home loans, if the borrower defaults, you can go in foreclosure on the property, and depending on how much the down payment was, you can generally recoup your the amount that you lent out, right? Because if the borrower put 20% down, and they default, let's say within a year, there's still a lot of equity in that home that when you go and foreclose on it, you can make up for the amount that you lent. That's not the case for personal loans. If they default, that's it. You're stuck. I mean, you can make some phone calls, you could send out some scary letters, you can continue making phone calls, but if the borrower chooses not to repay, there isn't very much that the lender can do about it. And now that there is increased risk in the banking industry, they don't want to hold on to these assets. Nobody wants them on their balance sheet, right? So they don't want to buy them and hold on to them, right? So SoFi right now is stuck with a lot of those personal loans that they originated because they haven't sold it. They didn't sell any in that quarter. The CFO goes on to say, Our bank deposit base of 10 billion is growing really quickly with the vast majority of our deposits. Okay, so that side of the business did okay, right? Um, they had some trouble selling their personal loans because of the banking turmoil, but in terms of deposit base, that was okay. They added billions of dollars in deposits in the quarter. There was some investors that were concerned that maybe people would take their money out of SoFi and put it into Bank of America or JP Morgan, one of the bigger banks, right? Because of that flight to safety. But that didn't happen in the quarter at SoFi. So the banking turmoil impacted SoFi's ability to sell personal loans, which is its largest business right now. That's the area that's growing the most, and that's the area where it has the most available for sale. In fact, let me show you. Here's their balance sheet that shows their loans held for sale. You look at personal loans, 9.6 billion, and the second place is student loans at 5 billion. So they've got, and then home loans is a very, very small fraction of their overall business. That part is fine, but it's the personal loans that they had difficulty selling, and it's the area where they have the most, 9.6 billion. Okay, so that's a little bit concerning. That's an area it was impacted, but it is reassuring that deposits are not leaving SoFi, and you can understand why. SoFi is offering an industry leading savings account rate. So if you leave your money at SoFi, I think they just raised it to 4.2%, one of the best saving rates in the industry. So people are not looking to move that money out somewhere else because they're already getting a good amount on their money. And then SoFi offers you several other benefits as a perk of being a direct deposit customer. So they did a good job retaining customers. So the only way they're being impacted um, is through the ability to sell these personal loans. So this is something to keep an eye out for in the next quarter. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.